And you're ready for me to kick this off then here, Danielle?
Yes, and I just wanted to inform everyone our topic today is election impact on investments, and we welcome Chad Plontz here from Edward Jones.
All right. Well, thank you, Danielle. Appreciate you having myself with Edward Jones on to provide some information today. I'm going to go ahead and share my screen to make sure everybody can see that. But also you may be seeing my camera here as well. So I'll turn that off here in a moment once we get kicked in, so I'm not distracting you at all. But yeah, I'd like to thank everybody for joining us today. What we're going to be covering today is topics. The topics are basically just covered in our monthly issue of what they call the Edward Jones Perspective. So that's what you're seeing here in the video. For those who are not familiar with it, Edward Jones Perspective is a monthly newsletter focused on investment strategy and market commentary for individual investors. So this is actually something that you can receive from us, Edward Jones, on a monthly basis at no cost, something that we can send out to you. So if that's something of interest, feel free to reach out to myself, Chad Plontz with Edward Jones. I'm actually located here in Bowling Green, or you can obviously reach out to Danielle as well. She can probably put you in touch with me. But we are located at 519 West Wooster, so close to the Committee on Aging, the Senior Center downtown. So, yes, you can always reach out if you have any questions. So, but that's what we're going to be covering today. Danielle briefly touched on the idea of just, will this election year be politics as usual, right? So we'll go ahead and jump in to that. Let me pull everything up real quick. And all right. So hopefully everybody's seeing my screen right now. We're going to take you through a little presentation. So once again, will this election year be politics as usual? So we're going to begin today by just discussing 3 trends you should know when it comes to politics and investing. So what you're going to see here first is, as we approach these 3 trends, as we approach November with the election just around the corner, right? There's going to be a key focus for investors with the election. And historically, election years have been positive for stocks, with equities returning about 9.5% annually on average, and the market rising 78% of the time in a presidential election year since 1947. However, obviously 2023 brings its unique challenges. So with the 2020 election, we will likely see an election that's heavily influenced, obviously, by the COVID-19 pandemic, the resulting recession that we saw back in March. We saw the market drop by almost 40%, and the emerging, albeit rocky, recovery that we've seen over the past few months. In an election year marked by unique economic and social challenges tied to the pandemic, these are 3 of the trends that we think you should know when it comes to politics and investing. So trend 1, as you're seeing here on the screen, is consumer confidence is often tied to partisan views, even when market conditions are favorable. So consumer spending drives about 2/3 of economic growth. So when consumers feel confident, they're willing to spend more, right? And that spending boosts demand and economic growth. And consumers tend to have more confidence about the economy when their preferred party is in office. So Democrats express higher levels of confidence between 2008 and 2016 when President Obama was in the White House. Since 2016, Republicans have reported higher levels of confidence under Trump's presidential administration. So independents tend to exhibit confidence at levels between the 2, really depending on the situation. More recently, obviously, the sentiment has slumped in all 3 groups due to the economic downturn, with Republicans feeling most positive. What's important to note is that each of these time periods, the stock market has increased. So growing 14.6 and 14.7 during the first and second terms for Obama, and year to date, 12% growth under Trump. So the next slide here is the second trend, right? Now more than ever, economic and corporate conditions matter more than politics. So years of divided government, over several presidential terms, obviously, have led to an ongoing expectation among investors of policy gridlock on key economic issues. However, the severity of the pandemic and its effect on the economy have led to a broad-based bipartisan effort to provide a much-needed lifeline to businesses and consumers in the form of direct payments to households, extended unemployment benefits, and low-cost loans, which we saw with the stimulus package that came out earlier this year. So the combined monetary and fiscal response to the pandemic was more aggressive and has occurred sooner than in any other recession we've experienced. So the Federal Reserve actually pledged $2.3 trillion to help the economy get back on its feet. And that's a larger sum than even during the Great Recession. So fiscal stimulus totaled over $2 trillion, and it's expected to grow, making this the largest rescue package as a percentage of GDP to date, and that's second only to Roosevelt's 1930s New Deal. So federal stimulus will be a key component of the economy for some time in the future, regardless of who sits in the Oval Office in the next few weeks here. The drop in the economic activity this year is likely to be the greatest or the deepest since the Great Depression, but could also lead to a quicker recovery than average. Starting up the recovery, due in large part to obviously the federal relief efforts that we're seeing. And trend 3 here is investors' knee-jerk reactions to election outcomes are often misleading. So we expect the economy to start to rebound in the second half of the year, but the climb back to pre-pandemic levels is likely to be rocky. We don't, so due to the injured labor market caused by the national lockdown and worldwide lockdown, really, and the challenges of reopening the economy during an ongoing pandemic, this economic and market uncertainty really is, well as obviously the sizable differences in policy platforms between the two candidates, will likely keep volatility elevated in the lead up to the election, which is just days away at this point, and even afterward. So looking back, stocks initially dipped 5.3% and 2.4% after Obama's 2008 and 2012 victories. Stocks declined 4% in the early hours after Trump's victory as well. So these post-election dips proved short-lived, with stocks quickly reversing course in all scenarios. So this post-election performance fits with historical precedents. If you go back to 1947, the S&P has climbed 6% on average in the 12 months following a presidential election. And it's about the same percentage as the 12 months preceding the election. So, during times of uncertainty like this, we often get questions about, what should I be doing? And we often get questions about annuities. People hear annuities and they during times of uncertainty, they wonder, is an annuity even right for me? So this is another portion of something that you might be able to implement in your situation. But this is kind of 6 questions that we can discuss to find out whether an annuity might even be right for you. So, so what you're seeing on the screen right now is 3 of the 6 questions. So when it comes to your retirement income strategy, it's always important to consider ways to ensure your money is going to last as long as you need it to. Certain annuities can provide guaranteed payments for life. So annuities with lifetime income benefits, which may be a strategy to consider for income insurance. But these annuities are not for everyone. Before you make any decisions, it's always great to speak with an advisor to make sure it's an appropriate strategy for you. So as we look at the 6 questions, the first question here is, how much of your necessary expenses are covered by outside income sources, such as Social Security or pensions? So the more income you have from Social Security and a pension to cover your necessary expenses, the less you might consider an annuity. Question 2 here is the ability to rate your ability to reduce spending and expenses in case of unexpected events. So the more you can cut back on your spending when the market isn't performing well, or have cash reserves to cover unexpected expenses, the less you might consider an annuity again. And question 3 there is, what is your comfort risk? And you can work with myself or an advisor to get a more detailed risk tolerance questionnaire. But the idea is the lower your tolerance for market fluctuations, the more you might want to consider an annuity. So questions 4, 5, and 6, hopefully you'll be seeing on the screen here, is question 4, given your current health and family history, you should rate how long you expect to live relative to the average life expectancy of early to mid 80s, which is current life expectations. So if you live longer than you expect, you could outlive your money, which is a real risk, right? Lifetime payments from an annuity can help guard against that. Question 5 is, which of the following is more important to you, leaving a legacy or retirement income? Because you can exchange access to principal for lifetime payments with certain annuities, it may affect the amount you can actually leave as a legacy or as an inheritance for your beneficiaries. Question 6, and the last question to think about here, is which of the following is more important to you, greater control over assets or higher lifetime income? So while the primary purpose and focus of an annuity would be to provide guaranteed payments for life, these benefits actually have annual costs that will reduce your investment returns. So they also may even restrict the control you have of your assets, including investment options and the access to the funds in order to guarantee that guarantee income and the guaranteed income payments for life. So once again, things to consider if you're looking at annuities. So now we move on to just preparing for the unexpected in times like this when we're in times of uncertainty, but even when we're not in times like that, when we feel more comfortable with what's going on economically, and life insurance is something that should be highly considered, right? And there's multiple reasons. So the first thing we'll hit on here is, should life insurance be in your business succession plan? So if you or somebody that you know is a business owner, small business owner, these are some of the 3 things that you might want to pass on in terms of information. So life insurance can be an important way to protect your loved ones, of course, if something were to happen to you, but that's just one role it can play in your financial strategy. So often overlooked is the use of life insurance for business succession planning. So here are 3 situations where this strategy might make sense. So number 1 is just ensuring a successful transition from one owner to the next. So an insurance policy with a buy-sell agreement can provide liquidity to you to buy out a deceased partner's share of the business, so helping reduce business interruption. This strategy can help provide more certainty on the when and the how of ownership transition. So a term or permanent insurance policy could be used in that situation. So number 2 here, protecting the business from loss of a key employer or a top performer, right? So are you concerned about losing a high producing employee or a partner and the significant impact that loss could have on your business? Having an insurance policy on that person, known as a key person insurance, could help the business recover financially. Once again, a term or a permanent insurance policy could be used in that situation as well. And then the final point here for business succession planning is 3 is leaving a business to one heir while leaving an equivalent amount to others. A lot of times we even see this with a farm, right? So you may have one loved one who is more interested in running the business or the farm, right? But you want to make sure that you treat all the heirs fairly. It's hard to split a business evenly among beneficiaries sometimes, so permanent insurance can help you leave the business to one heir and cash equivalents to the others. So every business is obviously unique, and your goals are going to be as unique as the business. But before you make any decisions about using life insurance for business succession planning, it's always good to make sure you're speaking with an advisor, your tax professional, and even your attorney if you have somebody that you can trust in those areas. So demystifying life insurance, right? So when it comes to life insurance, even beyond succession planning, life insurance sometimes can be confusing. If you already have it, you may be wondering, okay, do I have enough life insurance? If I don't have it, what type do I even need? So it's sometimes hard to get a starting point. So what you're seeing here is what we call our strategy is what we call a life insurance calculator, where the acronym is LIFE. So L is liabilities, then we have income needs, final expenses and education expenses. This oftentimes gives you kind of a jump off point to understanding what you may need in terms of how much life insurance. You may hear, to get a quick estimate, go 7 or 10 times your salary. It might be a good start. But if you really would like to jump into what's appropriate for your specific situation, finding out what liabilities you have, something were to happen to you or a loved one, would the mortgage need to be covered? Would, any other credit card debts or loans or car loans, those types of things want to be covered and paid off? Income replacement is the I, right? Income needs. So for your family to replace your future salary or ongoing living expenses, saving emergency cash, that type of stuff. Final expenses, pretty straightforward there. Do you want your final expenses covered? And then education expenses. So whether or not that's paying for the college education for a child or even a grandchild, right? So those are all things that can be, life insurance can be intended for. So when we go to, well, what types of insurance are there even available, right? So what type of life insurance should you buy? Well, I mean, there's two types of life insurance. So typically it's term and permanent, which you're seeing on the screen now. And how you should choose between them depends on obviously the goals you have, how long you'll need the insurance, and how much you want to spend. So term insurance is generally used to cover a specific time frame versus a lifetime need. So you may say, I want a term of 20, 25, or even 30 years, right? So it's also typically the most affordable type of life insurance, making it a great choice if you still have kids at home or you're paying a mortgage. So when the initial term period is up, you may be able to continue the policy, but typically premiums are going to rise once you continue that policy. Now, permanent insurance covers your entire lifetime and can be used for a number of goals, offering greater flexibility, but it is also more expensive than term insurance. So you may be able to use permanent insurance to leave a specific amount of money to your heirs or charity, regardless of how long you live, right? It's not only for a specific term or period. So some policies also offer flexibility to use the death benefit for long-term care expenses. I know long-term care, for the longest time, long-term care policies were issued. Now permanent life insurance can provide the ability to spend down the death benefits for long-term care needs. So those are some new options that are available. Many permanent insurance policies also allow you to build cash value within the policy. So life insurance needs can change over time, and the coverage you have today might not always be appropriate for you. So it's important to discuss your options, and I can look at your entire financial picture to kind of help you, complete the picture and make sure that you're properly protected. So you may be wondering, well, whether or not it's me or for a loved one, what are some signs that you might need that life insurance, right? So here are 5 things that we say, these are typically times when you should be considering it. So life insurance can sometimes feel like one of those, well, it's nice to have, I know I need it, but I can't afford it today, or I don't think I can afford it today, and I'll get around to purchasing it someday. However, life can be unpredictable. Life happens. Life insurance can play an important role in protecting yourself and the ones you love in your life. So the following events are what we would say are times to revisit this strategy. So first is buying a home. So how would the new mortgage get paid off if something were to happen to you, right? Could a surviving spouse or partner or housemate afford it alone? Is life insurance something that could help pay off the debt? So buying a home, anytime somebody's buying a new home, it's always good to revisit that. Number 2 is getting married or divorced, right? If you're combining finances or future goals with another person, you would want to consider what could happen if you were to pass away, right? Would you or your spouse be able to live the same lifestyle? Would you still reach your goals? Is life insurance could help fill important financial gaps for the surviving spouse. Now, if you're getting divorced and have always relied on your spouse for coverage, you may need to purchase your own policy. If you already have life insurance, review your policy to make sure it covers what you need, and don't forget to update beneficiaries, of course, in that scenario. 3, starting or losing a job. So many employers offer their employees life insurance benefits, but one thing people don't think about is the coverage you get through work. Is that even enough? Another thing is, typically these group policies are only effective as long as you're employed with a company, right? If you were to leave the job or even laid off, you and if that happens at an older age, right, it might not be as easy, whether or not there's health concerns, or you just may be paying more for it, if you're trying to replace life insurance coverage at a later age. So for having or adopting a baby, right, ensuring the future you have planned for your child can become a reality. So life insurance, obviously, we want to make sure that it would be there to, for education needs, if that were a goal. But then income replacement, right? Obviously, all of a sudden we're, have somebody dependent upon our income, right? So that dependent in the household, having that dependent, that is something that, could increase the amount of life insurance that you ultimately need. And then the final one there is just caring for a loved one. If you're primary caregiver, if you are a primary caregiver for an aging loved one or someone with special needs, life insurance can help ensure your loved one continues to be cared for if something were to happen to you in that scenario. So once again, just, 5 bullet points of things that you might spark the conversation for needing life insurance. So once again, that's just kind of an overview about what we think about what's going on with the markets, the election. I know I've obviously thrown a lot of information out to you in a short amount of time, so we've covered a great deal of information today. Of course, if you have questions or would like to discuss your specific situation at any point, once again, I know some folks jumped on late here. My name is Chad Plontz. I'm a financial advisor here in Bowling Green for Edward Jones. We're located at 519 West Wooster Street. You can always reach me at chad.plontz, Plontz at edwardjones.com, or of course you can always reach out to Danielle Broglie with the Senior Center, and she would be happy to put you in touch with me. If the questions do come up, I'd be happy to answer some questions now, or if it's something you want to reach out to me one-on-one, I'd be happy to answer those questions as well. But Danielle, I do appreciate you offering us this ability to speak with folks here in the community, and I guess I will open this up to any questions that folks may have.
All right. Thank you, Chad.